right? Which will summarize all balances of all T accounts, right? So here we have learned already there are five types of account. If I draw a trial balance for your information, so we'll say, for example, this is trial balance as at 31st March 2025. We'll say 31st March 2025. Just look at it. So this is one of the format for the trial balance. So here you have three column, one for the debit, one for the credit, and the description column, right? Very good. Here you have description column, here the description column, then debit column and the credit column. Here we have learned already we have five types of accounts. Out of those five, right? Out of those five assets accounts. Assets, what are the assets we have learned? Cash, land, building, motor vehicle, stocks, debtor. Those assets accounts will have remember, debit balance. We have learned as per the double entry system, assets accounts are having what? Debit balances. Then expense account again have which balances? Debit balances. Then the other three, liabilities, liabilities are having credit balances, then income having again what? Credit balances. And capital accounts are having again credit balances, right? So as per the double entry system, we have already learned, right? All the debit, they shall have a credit for the same transaction. That's why every time debit and the credit are matching each other, right? For all the debit, there shall have a credit balance. For all the credit, there shall have a debit balance. Generally, it should be balanced. If you prepare the trial balance correctly, if you prepare the ledger accounts correctly, this should get balance. That balance means the accounting process is correct. See, so easy, not hard. So whatever the nature of the business, maybe a proprietorship, maybe a partnership, maybe a company, maybe not-for-profit organization, whatever the nature of the business, right, the same accounting process you need to follow, right? You know that in a proprietorship, there will be only one owner. So even the one owner is there. So accountant who is working on behalf of the business should apply this process, accounting process, to prepare what trial balance. Once you prepare the trial balance, then only you can prepare the financial statement. See, today chapter. Once you prepare the trial balance, then you can prepare financial statements. Right, this is having two. One is the income statement. The other one is statement of financial position. Right, very important. Right, these two are very important. What are the financial statement? Actually, in your level, accounting means just updating tables. You should remember all the formats of the table, then only you can update it correctly. If you can't remember the formats, then you are in trouble. So you must remember the formats of all the T accounts, trial balance, ledgers, then the financial statement, all you must remember, right? Very important. So here today we are going to learn financial statement of a proprietorship. So I said the proprietorship having only one owner, he can decide anything related to business, at what time to open, at what time to close, what is to do with the business, right? So what are the transactions that we will do on in the business? All these things they can decide. So they mean who? The owner. In a proprietorship, remember, only one owner will be there, right? So we are going to learn, we are going to prepare the financial statement. So financial statement of proprietorship of a proprietorship include financial statement of a proprietorship include income statement right here, which will calculate profit or loss for the period, profit or loss of the business, loss for the period, right? So here, so simple. How do you calculate the profit? So profit is equal how? Income minus expense. So easy. Profit is equal income minus expense. Profit is equal income minus expenses. Just give me a minute, student. Just give me a minute. Hello. Right? So here, so that's so simple. How do you calculate the profit for the period? Profit equal income minus expense. That means for profit calculation, we will consider only income for the period minus the expense for the period. The second one is, so this shows the this shows the financial performance of the business. Financial performance of the business. Then the second one is, right? So number one, income statement. Second one is very important. See carefully. Statement of financial position. Statement of financial position. Right? This is which will shows the which shows the financial position, which shows the financial position of the business, which shows the financial position of this business. So here we will take what? Another formula that we have already learned. This is prepared as at a date. Remember, this is prepared as at a date, right? So this is we having another formula here, that is assets equal capital plus liabilities. Now you can see in the trial balance, we are having five types of accounts. What are the five types of accounts? Assets, income, capital, expense, liability. Out of those five, income and expenses are considered in the income statement for profit calculation. Then the other three, assets, liability, capital, are considered in financial position of the business, right? So very important. So I'll draw the formats now. So for your reference, right? Very important. Remember, examiner will test these formats. You must remember the formats and prepare the financial statement, right? We'll say format of income statement. Now see, just look at it. Be patient, just look at it, right? We'll say this is the format, we'll take it. Shakti's business. Shakti's business. Income statement for the year ended. Shakti's business income statement for the year ended 31st, we'll say 31st March 2025. Right? Student, am I audible to you all? Naveen? Litum?
Yes, sir.
Am I audible?
Yes.
Very good. Just look at it. I'll draw the formats. So all these formats you must remember. Huh? All these formats you must remember. So before you go to the exam, practice more questions. Right? So the name of the business is written here. Then the form statement name is given here. Right. Start with the income, that is the main income, sales. Then minus sales return. Then again minus cost of sales. So just see, this format is very important. So you must write here the cost of sale breakup, opening stocks plus purchases, then plus carriage inward, transport cost, carriage inward, then minus closing stocks. Then your answer from here to here will be the cost of sale, students. This is the breakup of the cost of sale. This is the cost of sale breakup. Then you get the answer here. Once you deduct this, gross profit. Gross profit. This is one of the answer, right? So gross profit, then plus other income other than the sales. If you have any other income, any other income, you record it here under here. Other income, maybe uh, discounts received, maybe rent income, maybe interest income. Any type of income you record under the other income. Then deduct minus expenses. Expenses you have classified into three categories. Expenses you have classified into three categories. First one, administration and establishment. Right? Administration and establishment. Under that, there will be rent, then electricity, then water, traveling, then office equipment, depreciation, then building maintenance. Likewise, there will be a lot of other expense coming under the administration. Then sales and distribution. You take the next heading, sales and distribution expense. You take it here, all the expenses, right? Then sales and distribution under that, here you can have the other income. right? So you will underline here, get the total, then you will underline here, it's a minus, expenses are minus, no? Then you deduct here. Then sales and distribution, what are the sales and distribution? Here I will put the detail. Closing stock, you have to deduct. Once you deduct the closing stock, then you will arrive cost of sales. Here sales minus the sales return. Then here answer is gross profit. Answer is gross profit. How do you find the gross profit? Gross profit equal say net sales minus here the answer we can say net sales minus cost of sales equal minus cost of sales. No need to write all this breakup in the exam, huh? So just put the numbers only. Here, sales and distribution expense, sales commission, discounts given, then bad debt, then advertisement, then business promotion, right? You can easily understand. So these expenses are related to administration of the office. These expenses are related to sales and distribution. See, sales and related distribution expense, right? So very important. Related expenses, right? Then you deduct the other expense, finance and finance and other expenses, right? That mean related to finance cost, maybe loan interest. You can log in you can use the same link when when the time is over. Use the same link. Then loan interest, bank charges, overdraft interest, right? Those type of finance and other expense, maybe donation, that's other expense. Donation, right? Those type of expense you take it here. Minus the expense total. So the minus you show as a bracket. It accounts if anything within the brackets, that means it's a deduction. Then after deducting this, you get the final answer here. That is the net profit. Net profit of the business. Net profit of the business. Very important. This is the format of the income statement. Remember, student, this will be definitely tested in your paper. Right? So we'll see one of the question in paper. Right, we'll do this question from this paper, right? 2023 MCQ 35 to 40. 2023 all level MCQ 35 to 40. Am I audible to you, students? Sarit?
Yes, sir.
Very good. Is it understandable?
Yes.
Right. So definitely you must remember the formats, huh? Without the format, you can't do the accounts. Right. We'll see this question. We'll practice few questions, right? Then you can easily understand. Answer the question for 35 to 40 using the following information. Someone started a service providing business on uh, 1st Jan 2023 by investing 500 and purchase 500 office equipment 320,000 from it. So this is a new business. This is a new business they have started on 1st Jan 2023. So owner's investment is given here 500,000. It is not an income. Owner's investment is not an income. So they say owners have invested 500,000. It's not an income. Owner's investment is not an income. It's capital investment, right? Very important. Owner's investment is not an income, right? So on the same day, they have purchased office equipment 320,000. Some information relevant to the year ended 31st December 2023. Now you can see period is covered here for the year ended, a calendar year. So here that covered year ended, very important. Year ended 31st December 2023 are given below. See the income. So the here the nature of the business is service providing organization. Here they say service providing businesses. That means they don't have sales. They don't have the sales. Their main income will be the sales income. You have service income. Their main income will be the service income, right? So this is the service income, then the commission income, that's other income. Then they have given a lot of expenses. Then assets of the business 31st December 2023 mean closing date. Office equipment 320. Now you can see owner has purchased 320,000 of office equipment here. The same office equipment they are having here 320,000. So see here same 320,000. Right, same 320,000. Right, so just see the rest. So here these are the expenses they have given here. What are the expense? Employee expenses, advertisement expense. So employee salaries is administration. Advertisement expense is a sales and distribution. Loan interest, finance and other. Stationery admin, electricity admin. Then assets of the business 31st December 2023 can mean closing date. You have to read the question carefully. So here that the period cover is 1st of Jan 2023 to 31st December 2023. 1 year period, right? So they say here 1st of Jan 2023 to 31st December 2023. Right. Then the cash balance closing given. Liabilities of the business 31st December 2023. Bank loan is given. Then the bank overdraft is given. So we have learned already the meaning of the bank overdraft mean negative balance in the bank current account. So here the meaning is negative balance in the bank current account. Negative balance in the bank current account. Then the bank loan, there is no any stock as of 31st December 2023. Closing stock is not there. Employee salary is 20,000 for the month of December 23 has not been paid as of 31st December 23. Right? Has not been paid. So this is not paid mean this is accrued expenses. See, has not been paid. This is called accrued expenses. Unpaid expenses we call unpaid.
Okay.
Right. So here, second adjustment is very important. Employee salary is 20,000 for the month of December 2023 has not been paid. So we learned that unpaid bills, unpaid expenses are we call what? Accrued expenses. Remember, these are very important, right? Very, very important. High level of summaries we are learning. Then commission income 15,000 to the year 2023 should be received as at 31st December 2023. Now you can see here we haven't received commission should be received. It's a receivable. Commission receivable. Very important. See here. It's a commission receivable. Right? We haven't received it. They say commission income 15,000 relevant to the year 2023 should be received as of 31st December 2023. We haven't received it yet. That is yet to receive. It is a receiver bill. Very important. Then office equipment are to be depreciated 10% annually. Office equipment are to be depreciated 10% annually. So we'll calculate the office equipment depreciated. Now you can see office equipment cost is 320,000. So then we'll calculate, see, office equipment depreciation. Yeah. 320,000 into 10%. 10% for the year, it's 32,000. So depreciation is what? Expense. Depreciation is an expense for the wear and tear of the fixed assets. We will charge an expense called depreciation. So just look at it. For the usage of the fixed assets, we charge depreciation. Depreciation is an expense. Depreciation is an expense, right? So here we can prepare the income statement. Very important. Using this information, we can prepare the income statement. So I'll copy the same format down. Just look at it, and we'll delete the. We'll clear it. So what is the name of the business? Saman's business. Just look at it. Saman's business income statement for the year ended 31st December 2023. So this is the format. So here you don't have the sales. It's a service providing business. Then your income will be service income. Then service income. So is there any direct expenses to provide the service income? then no, then service income, then plus other income, right? So this is other income. If any income other than the service income, if you have any other income here, you can see commission income is there. So you have to add it under that. Then minus all the expenses, then you can get the net profit for the period. So we'll take here minus expenses, minus expenses, under that administration and establishment. So just you need to classify your expenses. Then sales and distribution expenses. You wanted to classify all the expenses, right? Sales and distribution expense. Then the third one is finance and other expenses. Right, then you can arrive the final figure here. That is the profit for the period or the year. Net profit for the year. Right, we'll see from the beginning. There were no stocks as at 31st December 2023. No stock balance. That means nothing to do. So here you have to start the question when you are doing the financial statement. Remember, student, you need to start to do. You need to start the question from the adjustments first. Don't don't use this top information before you in doing this adjustments, right? First you must do the adjustments, then only you can start to do the trial balance figures. Remember, very important, right? So we'll see here. Second one, employee salary 20,000 for the month of December 2023 has not been paid as 31st December 2023. Now you can see the salaries paid amount is 120,000. Salaries paid amount is 120,000, right? So unpaid salary is how much? 20,000. Altogether, the salary expense under the administration. Salary expense will be, see the way I am calculating. How much the paid amount? Employee salary is 120,000 plus. Here this is the paid amount 120,000 plus unpaid amount, that is 20,000. Even though you haven't paid that, that has been already incurred. So that is an expense, you must take it here. Then the salary expense together, that will be 140,000. See, if any expense that has not been paid, you must add it here. Then commission income 15,000 relevant to the year 2023. Relevant to the year 2023. මේ අවුරුද්දට අදාළව relevant to the year 2023 should be received as at 31st December 2023. Now you can see we have received a commission income of 75,000 and we haven't received another 15,000 that is yet to receive. We call it commission receivable. Then altogether other income, commission income. Now see, the received amount is how much? 75,000 plus, this is the value, commission income received amount is 75,000 plus the receivable amount is 15,000. Then your total commission income will be here 75,000 plus 15,000 is 90,000. This is your income. Then we have done adjustment number 1, 2, 3, did it. Number 4. Office expense should be depreciated 10% annually. We have calculated the depreciation. It came here how much? 32,000. It is administration expense. Office equipment depreciation. Right? Just look at it. It came how much? 32,000. Office equipment depreciation again an expense. So it came how much? 32,000. We have done all the adjustments now. It's done. So see the way I'm doing the question. First you need to do the adjustments. Then come back and copy the figures even in the above. Say service income, it's your main income 230,000. Then commission income done. Employee salaries we have taken here. Salaries taken done. Advertisement 40,000. Sales and distribution. Advertisements 40,000. Advertisement 40,000. Then loan interest 2,000. It's finance. Loan interest 2,000. Loan interest 2,000. It's an expense. Then stationery 10,000. Again admin. Stationery expense. How much? 10,000 here. Stationery is administration expense. Then electricity again admin 50,000, 15,000. Electricity again here 15,000. So just you must classify all the expense. Then office equipment is a fixed asset. It won't come. We did the depreciation. Cash balance is an asset. It won't come here. Liabilities also will not come here. Right? But here you can see the liabilities of the business 31st December 2023, 10% bank loan is 50,000. If the bank loan is 10%, right? If having a balance of 50,000, then the interest should be how much? 50,000 into 10, that is 5,000. But you have paid only here, how much? See here, you have paid only here how much? 2,000, right? Even though paid is only 2,000, you must take on all the expense. Loan interest equal 50,000 into 10%. The loan interest is 5,000. So you must take not the payment amount, the amount that's relevant for the year. You must take the amount that is relevant for the year. It's how much? 5,000. So we have record everything. Now we'll see here total income. You can get here the total income 230 plus 90 is 320. Then here how much the administration expense total is 197,000 administration expense total. Then advertisement total is 40,000. Then finance expense is 5,000. Expenses are minus. Then the net of here profit for the period will be 320 minus 197 minus 40,000 minus 5,000 is 78,000. Very important, right? So basically here what I have done, right? Take the total income minus all the expenses whether paid or not. Minus all the expenses whether paid or not, right? So we prepare this income statement, these two financial statements on which basis, student, remember, very important. We prepare our financial statement on which basis? Not on cash basis, no, it's on accrual basis. One more star here. Financial, we'll say income statement and statement of financial position are prepared on accrual basis, not on cash basis, not on cash basis. Done. Right, so it's done. So we have learned the format of the income statement and we have done a question from the income statement, right? So we'll just look at the format of the statement of financial position. Format of the statement of financial position. Just look at it. We'll take the business name is again Shakti. Statement of position as at 31st March, we'll say 2025. These formats are very important, students. You must remember. Here you take only assets, liability, and the capital balances only. So you take here assets. Under that, non-current assets. Under that, non-current assets. Then you can say all the non-current assets. Land, building, office equipment. Start it again. So this is the general format, right? So the assets we have classified into two. So one is the non-current assets. Here you take the cost, accumulated depreciation. You deduct the accumulated depreciation. Then you deduct get the net book value, right? That is, I will explain the net book value later on. So what is mean by net book value? You take the cost, then accumulated depreciation and the net book value. Here you get the cost total, then you get the accumulated depreciation total and the net book value total. Then you take the non-current current assets. Current assets. So current assets may be stocks, stocks or the inventories. We can say inventories. Then trade receivable, or we call it debtors. Same names. Then prepayments. All are assets for us. Stocks is an asset, debtors are assets, prepayments are assets. Prepayments are assets, then the bank balance, then cash in hand. You take all the current assets here. Right, then you take the total current assets here. Just look at the format. We will do few questions. Don't worry. Then you take the total assets. Now see the formula. Total assets here. Total assets. Then you take the capital. We have learned a formula here that is assets equal capital plus liabilities. Right? So the same formula. Capital, opening balance, plus profit. So the in a proprietorship, profit earned by the business is entitlement of the owner of the business. So therefore, profit for the period will be added to the capital. Profit for the period. Then any drawings. Drawings you must deduct here. Minus drawings. Then you take the non-current liabilities. What are the non-current liabilities you have? You take it then. Maybe bank loan. And then you take the current liabilities. These are new for you. Don't worry, we will learn. So maybe creditors, then accrued expenses, bank overdraft. So those are current liability. So the liability that required to settle within a year, we call current liability. Liability which required to settle within a year, we call the current liability. Remember. Here, capital opening balance, profit for the year, then the drawings will be deducted, right? And then you take here any type of a bank loan. Then finally, you can get the total here. That is total capital and liability. Total capital and liabilities. Right? So this is the final format of the statement of financial position. Remember, student, student, remember these formats are very important. In your paper, if you go to the last question of your paper, this will be the last question. See, every year, this is having 12 marks, a big amount of the marks. So this is the trial balance they have given you. Then they ask in the statement of profit or loss or the income statement. Then they asking statement of financial position. Just look at this question. Right, so the trial balance is given. We know the trial balance debit have two things. We have already learned the trial balance debit side having two things. That is income and assets and expenses. Then credit having liability, capital, and income. So the trial balance they have balance with lot of information. Then some additional information they have given. They're asking you to prepare income statement or profit and loss account, income statement or the profit and loss account. Then they're asking statement of financial position. So we'll do this paper 2023 question number 73. Naveen, is there anything to clarify?
Was it?
Right, very good. Right, we'll read the question first. Following is a trial balance. Now see, we have learned the trial balance. So input for the financial statement is, remember, the trial balance. So without the trial balance, you can't prepare a profit and loss account or the statement of financial position. To prepare those two tables, you should have a trial balance. Following is the trial balance of the Duminder's retail trading business as of 31st December 2023. They have given you a trial balance. Then what are the things? Purchases, it's an expense. Sales income. Stock as at 1st Jan 2023 mean opening stocks. This is the opening stock. 1st Jan 2023 mean it's opening stocks. Opening stocks. Then carriage in worth, debtors is asset, right? Debtors assets to the statement of financial position, creditors liability, then bank loan again liability, paid bank loan interest 6,000, then distributing vehicle. It's a fixed asset, non-current assets. Provision for distribution of the provision for depreciation of the distributing vehicle 1st Jan 2023. Again, they have done the depreciation of the distribution vehicle as at 1st Jan 2003. Again, what is it? Opening balance, right? Again, it's a opening balance. See here, 1st Jan 2023 mean it's a opening balance. Then furniture and equipment cost, electricity, advertisement, cash balance, capital. The trial balance is balancing, right? Very important. This is again what? Opening balance. Opening depreciation. We'll say opening depreciation. Opening depreciation. Then stock as at 31st December 23 mean closing date. Closing stock 31st December 23 mean closing stock 88,000. Distributing vehicles by 5% and furniture and equipment by 10% are depreciated annually on straight line basis. We will calculate. So how much the distribution vehicle cost 400. We'll calculate distribution vehicle depreciation equal the cost of the depreciation asset is 400 into 5%. So 400,000 into 5% mean 20,000, right? So the distribution vehicle depreciation is how much? 20,000. Then they're asking you to calculate one more. Furniture and equipment depreciation. Furniture and equipment depreciation equal. So here they have given the furniture cost 120,000. 120,000 into 10%. So here that is equal 12,000. See, so easy. The way that you calculate the depreciation. So the distribution vehicle depreciation is which type of expense? Sales and distribution. Right. So here we did the distribution vehicle depreciation, that is sales and distribution expense. Furniture and equipment depreciation will be admin, admin and establishment expense, right? Very important. So the classification is very important. Examiner is carefully looking whether you have properly classified expenses, right? You can't mix it and put. So you have to identify what are the administration related expenses. Then what are the sales and distribution related expenses. Then what are the finance and other related expenses. So we'll prepare the format. Duminder's business Dominguez business. Profit and loss statement for the year ended. Profit or loss. Statement for the year ended 31st December 2023. Oh, itu dah sudah mana? Ini itu dah wastu. Oh,
Ayo, yang gimana cuma ya panas ya. එයාගේ තරුව පස්ස පැත්ත ඇනිලා.
itu mah. Oh,
එයාට නෑ.
start the format. Sales minus sales return minus cost of sales. So the breakup of the cost of sale you must write here. Opening stocks plus purchases plus carriage inward then minus closing stocks then your answer here is gross profit. Gross profit. Here the answer is gross profit. Then plus other income. Other income minus expenses under the expense we have to write administration and establishment administration and establishment then sales and distribution sales and distribution expense then finance and other expense. Here final answer will be the profit for the period, profit for the year. Net profit for the year. Net profit for the year. Then they're asking here not only the income statement but also the statement of financial position. They're asking B, statement of financial position of the Dominguez business as at 31st December 2023. So you must draw that as well. So we'll draw the statement of financial position. I'll copy the same here, then it's easy, no? Statement of financial position. The name of the business, Dominguez business. Statement of financial position as at 31st March 2020. 3. Here you must take the assets, all the assets, then non-current assets, then the liabilities. I'll be clearing all this. It's easy enough. Right. We'll start from the additional information. Remember, students, when you are doing this question, you must start with the additional information. Don't touch the trial balance information before you finish in the additional information. Right? So we'll see what are the additional information. Stock as at 31st December 2023 is 88,000. That is the closing stock. You must write here. Closing stock, it's a minus. So the value is 88,000. Closing stocks here, 88,000. That is for the cost of sale calculation. Closing stock 88,000. Then this closing stock is an asset for us. Stock is an asset for us. So here we have two type of assets, non-current assets and the current assets. The stocks become current assets. Then you write here stocks. The value is 88,000. Now see, two places I have recorded. One in the profit and loss account. The other one is statement of financial position. Right, it's done. First adjustment done. Then look at the number 2, second adjustment. Second adjustment is, they say, distributing vehicles 5% and the furniture and equipment by 10% are depreciated annually on straight line basis. Distribution vehicle depreciation came 20,000. It is sales and distribution expense here. Distribution vehicle. Distribution vehicle depreciation. We have done the calculation here. Distribution vehicle depreciation came how much? 20,000. Sales and distribution, that is 20,000. So here the same asset you must record in the statement of financial position as well under the non-current assets, distribution vehicle. Distribution vehicle. So see how much the cost. It says here distribution vehicle at cost 400,000. So then go to the statement of financial position, non-current assets. Vehicles are non-current assets, right? We keep it for our business operation purpose. Cost is how much the cost is here. Distribution vehicle cost is 400,000. Just copy the figure. 400,000. Then we have to identify accumulated depreciation. How do you find accumulated depreciation is charge for the year 20,000 plus the opening balance. Now see, carefully read, look at it. So the distribution vehicle opening depreciation we have 40,000 plus the charge for the year came 20,000. Accumulated depreciation is 60,000, right? So how does it came? Opening depreciation we have 40,000. See here. Provision for depreciation of the distribution vehicle 40,000. So here the breakup is opening plus the charge for the year. Here the breakup is opening plus the charge for the year. Opening plus charge for the year. Opening is 40,000. Charge for the year is 20,000. That is what we calculated. So accumulated depreciation is 60,000. The net book value is cost minus accumulated depreciation is how much? 340,000. So see here, very important. How do you make the depreciation adjustments? So you take the cost of the assets, then you deduct the accumulated depreciation. Accumulated depreciation mean opening plus charge for the year. Opening plus charge for the year. So opening is given 40,000. Then the charge for the year came 20,000. Then the total depreciation is 60,000. Done. Right? Depreciation is a expense. You must write depreciation under the sales and distribution because if this is the vehicles are used for the distribution purpose, right? Vehicles are used for the distribution purpose. Therefore, the distribution vehicles will be sales and distribution expense. It's done. Then the next one, distribution vehicles by 5% and the furniture and equipment by 10%. We have done the depreciation here. See, furniture and equipment cost is how much? 120,000. So 120,000 of the 10% is how much? 12,000. Furniture is used for the administration purpose. Therefore, furniture depreciation is how much we calculated it? We have done it. 12,000. It's here. 12,000. Then under the non-current assets, you must write the asset, furniture, total cost of the asset is, furniture, cost of the asset is how much? Furniture, 120,000. Cost of the assets, 120,000. Then accumulated depreciation again, the total charge for the year plus the opening. So here, opening, total accumulated charge for the year plus opening how much? So charge for the year is came 12,000 plus the opening balance is, see here, furniture depreciation, you don't have opening balance, that means zero. Accumulated depreciation, furniture they haven't given, that means zero. Then the total accumulated depreciation is 12,000. Then easily you can get the net book value here. Cost minus accumulated depreciation 120,000 minus 12,000, you get the net book value is 108,000. Very important. See, this is the way you do the question, right? This is the first question we do. My plan is to practice more question than the past papers as much as possible. Then in the exam, it's easy for you, right? So you practice, you look at this video again and again, then put the maximum effort to understand, then you are so easy for the examination, right? So adjustment number one did it, number two did it, done. Only two adjustments we are having. Now we'll come from the beginning. Right? So the office equipment depreciation we have done. Then we'll come from the beginning of the trial balance. Purchases 300,000, 380,000. It's here. Purchases 380,000. So remember, adjustments we will be recording in two places. Very important point. Adjustments are recorded in two places, and items in the trial balance will be recorded in one place. Recorded in one place. Very important. Right, so here purchases 380,000 done. Sales 550,000, it's here. Then stocks opening balance, opening stock, that is to cost of sale calculation 80,000 here. That is